We have a fantastic panel that actually has various areas of expertise. And to my left is Ashby Monk, and to his left is David Austin. And we have Stephen Pitch, and we have Erik Lassila, and then we have Minna. Why don't each of you maybe take less than a minute to give a brief intro of yourself.
Sure, thank you. My name is Ashby Monk. It's a pleasure to be here. I'm the Executive Director of the Global Project Center at Stanford University. We're a research center sitting in the engineering school focused on innovative models of finance. So we think about how do we move the biggest pools of capital in the world into engineering projects. I also do a lot of work with large sovereign wealth funds and pension funds around the world. I think on my bio it says I'm a senior advisor at Australian Super. That's true. I sit on a board for that organization here in the US, on top of $4 billion worth of real estate. And I work with a bunch more of these types of organizations around the planet.
Hello, David Austin here. Thank you for inviting me. So I'm a general partner at Machine.vc. It's a new VC focused on specifically what we call hardware SaaS. So companies that are trying to provide a product or service through software and cloud, but requires unique pieces of hardware to be manufactured and made to successfully deploy. So taking all of the things happening in software but applying it to the hardware space is kind of what we focus on. Focus on Series A fund. Focused on trying to help companies through that. My background is mostly Apple. It's about 17 years at Apple doing products, and now I'm trying to help startups deploy products worldwide.
Thank you. My name is Stephen Pilch. Thank you for having me here. We're a firm based in San Francisco. We're called Stockbridge Capital Group, and we manage pension fund money for investment in real estate. So we'll have a number of projects in the Bay Area, all through the West Coast and all through the country. One of the projects, if you know, San Mateo, the old Bay Meadows racetrack, that's one of our assets. We own that asset. Bay of San Francisco, Treasure Island, down in Southern California, Hollywood Park, and we'll touch on that a little bit later. So a little bit different than some of the other folks on the panel. It's a VC background. We have a number of U.S. domestic pension funds. We manage a little over $12 billion. But in addition, and I think one of the things we'll talk about later, is the influx of the foreign capital coming in and the sovereign capital. It started for us with this EB5 program, where we've raised over $1.5 billion in EB5 money, and that's now segued also in terms of raising money from high net worth individuals from Asia, as well as sovereign funds and large institutions based in China.
I'm Erik Lassila. I'm the U.S. partner for Peakview Capital. We're the U.S. division of a Chinese company called Shengjing Jituan. We are primarily a fund of funds. I manage a fund of venture capital funds investing in U.S. VC firms. We also do some direct investing, direct VC investing. And most of my background is in venture capital myself as a general partner. I spend most of my time thinking about how venture capital firms can be effective in the U.S. market and sort of forecasting what firms are going to be producing the great returns over the next 5 or 10 years. And also thinking about technology trends for our direct investing side. And because of the cross-border nature of my business, I spend a lot of time thinking about how U.S. and China businesses can work best together, how to connect the two, and how changes in the overall environment affect that kind of cross-border business.
大家好，我用中文啊。我们是来自在纽交所上市的一家中国第三方财富管理公司。那我看到我们旁边那个艾瑞克来自中国的公司，但已经有美国团队了。我们还是刚刚开始做境外的业务。那作为一家来自中国的第三方财富管理公司，我们是为中国的高净值客户带来全世界的一个资产配置的金融产品。所以我们在2015年纽交所上市以后，2016年我们去年新增的资产规模达到了500亿人民币。今年我们将会以100%的增长速度，我们也希望能够在硅谷、在美国找到更好的金融产品，带给中国的客户。
My name is Minna Wu, and I'm the co-president and CEO of Jupai, a public trade company listed in the NYSE back in 2015. As for now, we are a third-party wealth managed company based in China with various funds and management system global-wise. We primarily focus on real estate property management and fund-to-fund, plus private equity management as well. As for 2016, our total asset management is nearly $50 billion US, and in the year of 2017, we plan to double the number to $100 billion US with a future in the USA. We are looking for partners and potential companies that we can work with regard to the wealth management industry.
Okay, thank you for that. So the initial question will be slightly different dimensions, since there's been a lot of talk about venture capital. I want to look at from the angle of how the institutional pension and sovereign investment funds have actually impacted, Silicon Valley. And also, I'm sure you've seen that SoftBank is raising $100 billion, and part of that is will be coming from sovereign wealth fund into invest in tech. So I'm just going to throw out this question. I think any speakers, we don't need to necessarily go in particular order, but you can just kind of chime in on how you kind of see, particularly in 2017, but also recently, how you see the institutional and the pension and the sovereign funds are putting the money either directly into Silicon Valley companies, or they're putting money into the funds. Actually, it's the impact in the overall ecosystem and the economy of Silicon Valley.
Maybe I'll start off as the academic sitting at Stanford. I get the privilege of having a lot of the big pension funds and sovereign funds come through our offices at Stanford over the years. And I think the interesting thing to note in the past 2 or 3 years is the number of these organizations that are coming through and asking questions about innovation, economy, technology, venture capital. I think if you went back 4 or 5 years, you saw a real pullback on the part of institutional investors from venture capital. We had the big clean tech bubble and then burst. And so a lot of the big institutions in the world felt like venture capital was a kind of a fool's errand unless you were small, an endowment, and you could sort of make a single allocation to a couple of GPs work. If you're $100 billion or let alone $1 trillion sovereign fund, Silicon Valley just didn't seem to offer anything. And so that's changing. I think the interesting thing I'm seeing is that many of these organizations now realize they have to come back. They're looking at their existing portfolio of assets, and they're saying to themselves, wow, all these technologies that are coming out of Silicon Valley are going to completely disrupt my existing portfolio. I hold parking garages, and Lyft is going to change the value of that. I should be participating in this ecosystem. That's the first thing. The second thing is they're looking around and wondering where they're going to meet their return requirements. So they have a very high expected return, and they don't know where they're going to get that in this kind of anemic environment. And they have a short memory. And so the clean tech, crater that still seems to be smoking for many of us in the room is kind of forgotten. And so you see these institutions really coming aggressively, setting up offices here. I mean, just this week we heard an announcement that QIA is going to set up an office. Many more organizations setting up offices here and doing direct deals.
Just to give you some different perspective on the real estate side, what we see is they agree with the yield. The yield's been a big play for them because they're looking for yield that they can't achieve where they are divesting, whether it's in Europe or Japan or things like that. We see a lot of that happening sooner. They tend to like larger transactions. I think the Valley in particular benefits because they see the creation of the jobs from the new companies, and that translates, at least in our space, to real estate and wanting more space and expanding further. When we've rented space to tech firms out here, it's been everywhere from Yelp up in San Francisco to we put Bloomberg in the new space up in San Francisco, but it's their tech group. We put Alibaba in the space up in San Francisco, so there's a lot of that happening. Farther down here, we've had other companies expanding. with us, and then we have investors coming in from overseas. So I think if you look at a number I saw for, in real estate now for the U.S. coming out of just China last year was about $33 billion, which is quite a bit of capital coming out of the U.S. Major market was New York initially, then Los Angeles, and then it's San Francisco, and that is heavy in the Bay Area. So we don't see it stopping, at least not from our experience of who we have coming through our offices and visiting us and trying to find out and what we can do for them and how we can actually help them search for yield.
I think we've really seen a kind of increasing fluidity and globalization in the capital markets, which has been increasing for a long time. But now you also have China joining the fray, and there are some capital controls issues. But the Chinese investment in the U.S. is not going to slow down. And sort of thinking about the Silicon Valley investment history and what's happened with private company investing over the last at least 20 years when I've been in this industry, there are market cycles where, on the way up and at the top, new investors come into the industry that are into the venture industry. I mean, they compete with the VCs for deals, and quite often they're corporate funds or they're corporations that and other types of organizations that believe that they can come in and sort of get a piece of the action, and then things go south as they always do, and those groups sometimes end up going away. Now, what I think is really interesting now is the sovereign wealth funds. These are folks that think not in terms of months or years; they think in terms of decades. And for the sovereign wealth groups and some of the global investors to come into Silicon Valley and make a long-term commitment, I mean, they're really thinking long-term, and they're hiring people, local folks who have